Welcome back. Well, Raymond has been one of the big winners in the last 1 year, surging 90%. Among the small caps, has delivered the highest return since March 31st this year. Amit Agarwal, the Group Chief Financial Officer at Raymond, is joining us now to discuss their business outlook and how the demand situation is shaping up. In fact, you just saw that 12-month chart of Raymond, and you'll get to see the kind of returns that Raymond has generated. Amit, thanks a lot for joining in. Your last time when we spoke to you, you had mentioned that the demand situation was a bit muted, especially in the month of April and May. What have you seen since then? Has there been a pickup in demand? And if yes, across which geographies are you seeing a pickup? Where are you, planning to expand in terms of your store addition as well? If you can just give us a sense of what the next 1 year may look like.
Yeah, thank you for having me on the show. No, it has been a very good run for us. If you look at it, 22-23, we have recorded the highest revenue, highest profitability, and all of our business sectors have done very well, be it the lifestyle, be it the real estate, which we grew the business very recently. Now, coming to the current situation, you look the business across in the lifestyle. I think April, May had been a little muted because of the weaker demand. But still, if I look at the urban sector, at the sector in the tier 1 and tier 2, we have seen still a decent growth coming in. Now, the question is about the tier 4, 5, 6, which has generally the summer weddings, which has seen a little muted. And we expect that hopefully in the next 10 to 12 days, we see a slight improvement. But then after that, the monsoon, when it kicks in, then there is always a dull season for us. But we expect the festivities, which we should start delivering our products to our customers, franchisees, and so on from the mid to late August. I see a very good demand coming up because there's a good festivities around in October, November, as well as in weddings.
Sure. Can you give us, a little bit of more perspective or some numbers as well? You said that there are 200 stores that you're opening to focus on the ethnic business. This is what you said last time around, and 50% of these stores will have ethnic wear. Can you tell us, and of course this business, as we know, has high gross margins as well. What kind of revenue potential do you see from these 200 stores? And in terms of margins as well, what could you generate?
So look, we are very clear that in the last year, 22-23, we have opened almost 65 stores. And this year, we plan to open more than 150 to 200 stores in the current year for the ethnic wear. We have also the plans for other formats, be the Park Avenue and such things. In this stores, because you have a certain stability time, you take a time to mature these stores. So we expect anything between 12 to 18 months to mature these stores. And the seasonal pick is very important when the festivities come, when the weddings come. So we expect when it is at 12 to 18 months, we expect anything, the revenue coming out of these stores between 1.7 to 2 crores per store. So that's a kind of a revenue per store we are targeting to grow.
Amit, what should the total revenue from ethnics look like? You gave us per store, but what should the number look like? Yeah, what was it, say, in the last year? And where is the number headed? Because you clearly believe there is big potential out there.
Yeah, so we had a very small revenue, around 70 crores in the last year. And we are targeting over the next 3 years to go anything between 400 to 450 crores.
Okay, all right. Amit, the other piece of the pie has been the real estate part. I recall a lot of investors were very disappointed when you'll say, hey, we're going to go ahead and develop it ourselves. But you've proved everyone wrong, actually. You'll have managed on the delivery. There's been good traction on ground as well. So kudos to you and the team on that front. But what's the way ahead from here on? On the real estate part itself, what could the sales volumes be or sales value be, say, for FY24 and FY25? And also, I just wanted to clear the air. What is the total, acreage that you have? How much of it is under development? And how much of it are you looking to develop or maybe sell out?
Good. No, thank you very much. I think real estate has been a very good area. And you see, I think we have come from a very different mindset because we have been a manufacturer and a brand player. So we come from that background where we believe very strong execution and the sales velocity. And to give you the perspective, in the first 2 projects, as we speak today, we have sold 80% of our total inventory. And if I look at it, the last year, we delivered a revenue of almost 1,000 plus crores on the reality side. And we have booked almost 1,700 crore worth of flat bookings have been done. which reflects very clearly that going forward, we will grow the revenues. Now, as far as the acreage is concerned, we have got currently under development almost 30 acres, and we still have 60 acres left to develop, which would translate anything between 8 to 9 million square feet. However, the journey is not just a monetization of the Raymond Thane land. It is beyond that. We have started already on the JDA project. One of the JDA project which we have signed in Bandra East is going to start over the next 6 months in terms of the construction as we are working on the approvals. And we are getting a lot of good response from various partners who would like us to join them in a JDA development, which will be the big growth engine for our real estate business. So we look very clearly that in the 3 to 5 years, it is a very large business for us. And therefore, if you see, we have done also the demerger of the business of lifestyle and making a pure play listed entities for real estate as well.
So, Amit, can you help us with a number? I think 3,800 crores is the total booking value that you've already generated. Sitting on this base, what can you do in the next 1 year? Over the next 1 to 2 years, what could the growth be?
I'm not going to give a guidance of 1 to 2 years, but I think over the next 3 to 4 years, we are expecting anything between 4,000 crores of revenue coming in from the real estate business.
And by when do we see 2 listed entities?
So I think we have already announced the demerger. We have already filed the papers for the stock exchanges and such things. It's a process and it is expected to be completed in the next 10 to 11 months. However, the demerger would be effective from 1st April 2023. So this particular year, you will have 2 listed entities, separate listed pure play net debt free companies.
All right. Good luck with that. Amit, thanks very much for that conversation and always appreciate it here on CNBC TV 18. That's the management of Raymond.